That was mad. You know what we listened to then? We listened to Double. It didn't even sound that off, right? I didn't even pick it up until just at the end. We're listening basically to two streams of the same song, about 15 seconds out of sync. In the wrong game, we should be in the mixing game. That big fantasy music. Alright, ready to go. Yeah, we won't do too long a one this today. I'm a bit charted out. Been in the market now, pretty much solid for 2 weeks, working from 6 a.m. So I'm just, at the point where I just don't care which way the market goes, and that's not a good place to be when you're about to trade, right? It doesn't matter. Doesn't mean I haven't been watching the market closely today during work. It's just a lot of things have settled down, especially the Aussie, and that's the main thing I do track. And there's a bit of sideways action going on a few pairs. So the dollar yen isn't really providing the same fireworks it was last week. Last 2 days anyway, and so you don't have that same impetus to have to be into the market. In terms of the ECB last night, looks like the reaction was pretty subdued. There was another sell-off below 110. Looks like it was just pretty much a test, a little bit of a body check there, test on the support. Looks like it held. We're back above 110. It was looking pretty bullish this morning at the start of the European session, but hasn't really had any follow-through. Probably the pound didn't help that, dragging it. No, not dragging it, but sort of capping it. Basically you want everything to go in the same direction, right? You want stocks to rally, you want chance for everything to sort of pump up together, and the euro yen and the pound yen can do that, right? But the euro, it's still doing well, especially against, say, the euro pound, but without the ECB now, it's like, why are we going to move? It's not clear that we're going to get some follow through today. Yeah, you might even get some selling in the stock markets. The buying that's happened in the last little bit, a lot of that is now anticipation that we will get, at some point more stimulus, right? So the market can't fall too far, but there is some speculation that the Fed may be more hawkish going on next week. So that everyone started to talk about this, and this is only just beginning today. Monday is just going to be a frenzy. Wednesday, by the time we get to Wednesday, and we're talking about the Fed meeting, I think the market would have talked itself into a US dollar rally. So that's a default view I'm going to be having next week. That coincides with that CPI number coming out from Australia. All right, on the Wednesday, the Fed is on Wednesday night, but Thursday morning our time here in Australia. But Wednesday night, so there could be a really double whammy hit here on the Aussie coming. Definitely the Kiwis looking fragile as well. The relief rally so far on those two pairs have been very shallow. So if you're looking at how, I actually thought that maybe we would get a bounce back to around 74.50, 75.40, sorry, and we haven't got that at all. Kiwis struggled above 70 a few times now, and so I know it looks like it's sort of consolidating, and sometimes the next move is higher. This sort of consolidation, though, I think is just preparing for the next move lower. And especially if we get a reason for the stocks to fall. Oil is starting to get dangerously weak, right? So, perhaps that's going to be the catalyst. But that doesn't stop the US dollar strength coming through. That adds to the US dollar strength. Yeah. There's a few things here that make trading a little harder. Of course, Fridays are always a little bit harder. I don't think we're going to get much movement today. It does depend, if there is serious weakness coming through in the stock markets, but so far they've been rebounding quite well. So, other than, say, the pound potentially testing some downside, I don't think the euro is going to break, 109.80 very easily, and dollar yen's capped now because everyone's afraid of getting too long, and it needs that stock market to come through, and the Nikkei is not supporting it as much here. So there isn't that driver. We haven't got that story yet. We're waiting for that next story to come through. Yeah, and so things might just sit sideways. Maybe some downside tests on the Kiwi and the Aussie later. That's doesn't really change the outlook, right? That's with the trend, but yeah, I don't have a conviction here on any of the pairs. Yeah, I mean, I'm on. If you talk about what we are, we're long Aussie Kiwi. That's fine. We've still got reasons to be long. May want to close this out before the CPI on Wednesday. And I'm long Euro and I'm long Euro Yen from yesterday. Alright, but there's really no reason to be in either of those, so I probably should get out. I mean, stocks are trying to rally here. I don't think they're going to get much further. Look, they don't need a reason to rally stocks. They can just keep on going. They've had a consolidation. Maybe they're just so bullish they're not even going to have a 2-day pullback, right? They might just have a 1-day pullback. That could be it for the Wall Street. Just that little dip there. But so in that regards, actually, I shouldn't be in these trades. So just take 7 pips. I'm going to leave Euro just for a little bit longer, just in case we grind higher. Euro against the US dollar. So just yesterday after that neutral ECB, it was pretty much. I mean, it could easily have gone to 111, 20, 30, 40, 50, right? And it didn't. But today, maybe catch the market, catch the shorts out a little bit wrong. So get up to that 110.90. It's possible. Yeah, so that's one trade. Maybe he's going to come through. But I've got no conviction on that at all. If I wasn't in the trade, I wouldn't be doing the trade. That sort of thing. So really, I should be closing it, right? When you don't see the market moving. And Aussies, I mean, if I had to trade, I'd be short Aussie and Kiwi. But yeah, no conviction at these levels. I really want a bigger level, a bigger rally. Pound, look, it could do anything. But that services PMI pretty much confirms that they're going to have to cut rates to shore up sentiment. Yeah, try and get things stabilized here, bounce back, because those PMIs are pretty closely related to how growth is going to come through, and if both are in contraction territory, the UK could be going into recession, and so there is reason enough to cut rates. After the Fed next Wednesday, we do get the BOJ on Friday, so we'll be talking a lot about this. This next week, most of the time the last week of the month is pretty quiet, but next week's going to be a cracker, and BOJ expectations are going to be sky high. I mean, if they come out and they kick the can down the road and sort of just jawbone and say we haven't planned anything just yet, that'll be like the third central bank in a row not to do anything when the market's been pricing in it all that easing. So it becomes harder and harder for these stocks to just maintain the faith. They're rallying on the expectation everyone's going to do something. Draghi said he will if the data starts to support it. So he's waiting for the staff projections to be redone, and that means that they'll get new projections by the time the next meeting comes at start of September there. But the equities will lose patience, right? You can't just have this rally on fluff and have no substance. So yeah, I mean, I'm struggling here to see even a particular trade that would make sense today. In terms of data, there's just some Canadian data later. So Canadian dollar is actually one of the weak ones as well. So it's not like they're going to cut rates in Canada, but it is linked via the oil price. And if oil continues to fall, and it does look pretty weak technically here, you are likely to see the dollar CAD break some pretty key resistance on the top side. Alright, I mean, it's not as easy as it looks when stocks are pretty much attempting to rally every day. So there is support for the CAD coming through via its usual channels of support, which are CAD Yen long and pound CAD short and euro CAD short, but right now, the market's just focusing on the oil price, and that's leading this CAD. And look at the key levels are really close here. We break above 132, and it's starting to ramp up, right? And it would make sense that the CAD would go down at the same time that the Aussie dollar and New Zealand dollar is going down. And secretly, stealthily this week, some of the big commodities over in China have been falling quite sharply. So there is some negativity in the background. You just can't see it almost because the stock market rally is hiding it. Yeah, I'm just going to remain long euro just in case we can pop higher here. I mean, obviously the next test would be that 110.60, but it's very unlikely we get, start to rally here, right, and then don't break that level. Just, then it's easy to get to that next level, right? So, yeah, we're not asking for huge moves, just 40 pips more to the top side there. In terms of divergence, that euro pound does make sense as well. So if you were going to hop on a trade, a euro pound long. I'm not really a seller of euro pound though. It's sort of like the pound Swiss, right? I like to be buying that one on dips. But I'm a bit patient here. The level on the euro pound is anywhere near 85 for me. So anywhere near 85, I'd be happy to start looking at selling. Pound Swiss, I mean, I'll just be looking to buy pound Swiss whenever the euro pound's looking capped. But if the market gets to those sort of levels, then we're talking about the pound down at 130. So then it becomes a little bit more dangerous if the major is under pressure. So we just have to check why the market's there. Pound yen is really, I mean, it's the most dangerous one next week with that BOJ announcement. If they under-deliver, if they do nothing, if they say they're going to wait and see and formulate a plan, or wait for the government stimulus package before making their move, because, government stimulus package really should be in coordination with the central bank. So if they wait and see because there's no details yet from the government, maybe they do have to wait and see just to see how much stimulus they want. So this one really could be in play on the downside in that scenario where they disappoint. Yeah, so unfortunately, guys, it's not really a good day to trade. And some days it's not going to be a good day to trade. I'd probably long dollar CAD, or long euro CAD in the current divergence. Yeah. I mean, I can't be looking to go long dollar CAD and long euro without looking at euro CAD. I haven't looked at EuroCAD for a while though. I don't even think it's on my bar. Oh, it is. Oh jeez, it's ramped up a lot already. It should be pretty aggressive with the. So I mean, there's a lot happening at the same time here, and this is generally a good sign that things are going to continue. Third test here of the Euro Aussie on the top side. Sentiment dreadful towards all these pairs, and the euro having that relief rally after the ECB failed to smash it down. I mean, if the Aussie if the US dollar comes through and caps this euro, it's definitely going to cap the Aussie, right? The Aussie would be hit as well. So this one is a relatively safe play. So the euro's actually gaining across the board here, and that's helping the euro major. We were long Euro Swiss as well yesterday, you may remember, but I just closed that out earlier. Perhaps I closed the Euro Yen too early. But let's have a little look at. I talk a lot about central banks, right? So it is important that I do give some background. I don't want to come across. I don't want to speak as if we're talking without educating a little bit, because some people don't know really what we're talking about. So what we have here in front of us on this page. This is central bank expectations. All right, now what we're looking at here is you can tell by the pricing in bonds what they expect, how many rate cuts they expect from each pair. All right, so this is informative in terms of knowing. If you looked at this every month, then you'd get a bit of a feel for the change in opinion on each central bank. So if we're looking at now the Kiwi, there's a fair bit of pricing in of 2 rate cuts from here for the next 6 months. So that's the current pricing. If that was to change, if they shut the door on a second rate cut, which would be really not smart by the RBNZ if they do cut in August, because usually you leave the door open so that the traders don't buy the dip. That can give them another 3 or 4 months leeway before they do cut again, helping to cap any sort of relief rally. So yeah, they are definitely focused now. You can see the pricing, right? In August, it's suggested it's going to be 2.02, which is above 90% chance they're going to cut rates, priced in by the market. So if they don't, the reaction will be much bigger than if they do. If they do, it may only be worth 50 points, and what market will look at is the tone of the rest of the statement to see how close they are to cutting again. All right, we'll jump across to the Aussie. The Aussie is just above 50%. Yeah. But this particular piece here, right? You can see how they don't want to price in more than 2 rate cuts. What I mean by that is that we've come down here to we're expecting a cut in the next 2 months. That's fine. All right, but they're not pricing in a second cut. It's only half a second cut. All right, so that's a different scenario to the Kiwi. All right, so this narrowing difference allows the Aussie Kiwi to rally. All right, over time. If they were to get down to 1.75, then the Aussie Kiwi would be, probably above 110. Everything else being held the same. Now, in terms of the US, okay, they're expecting one cut, but they're expecting one rate hike. All right, but you can see they're not even priced in a full 1 rate hike yet. Now that's probably a little bit to do with demand for those bonds, so this is not clean. Especially the Fed's not clean in terms of their short term. But if you see a dramatic change in this, in this graph, if I'm putting it up next month, because the Fed's a bit more hawkish than forecast, then you'll see it come through here on these numbers, and over time this is going to help the US dollar rally. Right now, the ECB, they're already negative rates, but you can see that they're priced in another 0.10 rate cut at some point, yeah? But they really are reaching the bottom end of their this is all experimental, what they're doing over in the Eurozone, so they're going to be hesitant to cut more, but they're reaching the bottom end of their ability to cut rates. Much more likely they'll do something with a QE program if they're going to change the easing. Canada has got 0% rate change basically, so this can potentially change. If the oil price was to go back down, you can start to see them start to cut, price in a rate cut, like the oil, when oil was below 40, there was pricing in a rate cut in Canada, but as the oil's rallied, it's been priced out. But remember where Canadian dollar was, right? Canadian dollar, when oil was getting smashed, all the way back at 147. Significantly, bigger sell-off than the Aussie or Kiwi. Yeah, so the potential here for the Canadian dollar to rally sharply on a move in oil to sub 40, is very real. A sub 40 move would push us above 136, probably back towards 138, 140, especially if the US dollar is looking stronger. And finally, we've got the UK, and so the UK, it looks like they're priced in nearly a full rate cut for the August meeting, but not much more than that. Yeah, so that can get more negative. That can definitely get more negative if it looks like they're going to cut again. Right, so this thing, you don't have to look at it all the time, but it's good to check it each month just to see if things have changed. Because this really, those swap rates that you're paying, a lot of the swap rates, right? It's important to watch these sort of pairs just to know what the, certain pairs are going to become carry trades or not carry trades. A lot of why they buy the Australian dollar and the Kiwi dollar when the stock market goes up is that they're high yielding. Now, rightly or wrongly, that's linked to the stock market. Yeah, and so if that's just the way the market's set up, you got to know that means that those pairs are what we used to call the carry trade, but the carry trade is dead. It may come back, but right now it's dead. Looks like stocks are taking another leg higher. Pound's taking another leg lower. Euro's doing nothing. Aussie. Alright. I'll have a look at some of the trades that have been posted. Let's see here. A couple from Slick. I've been on Slick for a long time actually. I forgot who he was before. But he's been in this room for a long time. He had a different name. So he has sold pound Aussie $176.80. It's working out well. I'm not sure exactly when he entered here. He entered before the rally, maybe. But either way, he's still in profit. But this was a little bit lucky, this one. And he's gone long on the oil. It's a little bit counter trend. Let's have a little look at that though. I think he's actually in profit here though. It's interesting. So he's trading off a chart which is a little bit different to my chart. And you get this with the different futures contracts. So there's a rollover around about 15th this... No, sorry, it was 18th this month. No, that's not the rollover. I can't remember the rollover time exactly this month, but there was a rollover not that long ago, and his charts are showing the low being at the same point here on the 11th. So he's bought the double bottom. This particular chart did not show that bottom, but regardless, I mean, he still did pick the bottom, so he's trading well. I'll look into that. I'll look into what he's. I'll ask him on the side there what contract that he's trading compared to the contract we're looking at here. Let's have a look in the IG one actually. IG's this is what there's a new contract in oil which is a rolling spot oil. Now the rolling spot oil doesn't have an ending date, doesn't have a contract date. And that even looks a little bit more different. Okay, that's even more pronounced than his one. So in the rolling contract date, you haven't, rolling spot, you haven't seen it below 45 in the early July. Yeah, we'll have a little chat with him. I'll find out what he's trading. At some point here, there's a rollover. I just don't know I can't remember the exact date. I think it was the 15th actually. So that's a Friday night. So that would, that's 99% sure that's the reason why. Let's have a look at the next one. J is long dollar Swiss. Should be doing fine in the risk on environment with the US dollar being strong. And he is up 20 pips already. So all these guys get some likes here. The other one's a little bit too far away. Yeah, a little bit too long ago to be relevant still. Yeah, so I'm not going to be trading aggressively today. I'm just going to be sitting on the sidelines waiting for next week. Action, if we do get it, it's probably going to come from the oil, so that will play onto the CAD, and potentially in the pound, but I don't think anything else is in play. It would really surprise me to see new highs in the US stock market. That would, help the dollar yen continue its rally, but I'm not going to be looking for that. Yeah, DJ, I mean, look, when the market's not moving, I do like to do education, so, that little interest rate rant was part of that, but over time, I don't want to come across too complicated, because the majority of people who watch the stream don't have the knowledge to be able to jump with us because we move sort of quickly from pair to pair to pair, assuming that you know the correlations, and so it's if I'm going too quickly, just say in chat, hey, well, what's the relationship between Canada and oil? What's the relationship between Euro pound and pound Swiss? Sometimes I just assume that I've said it so many times that people might know, right? So I don't mind saying the same sort of stuff again. And it's a lot of the same thing I do at work, so it doesn't really matter. I teach the basics and fundamentals, 5 to 10 times a week to new traders. So, and that's what this is still. This is still very basic stuff, but it doesn't get too much more complicated either. The correlations change. Why those correlations change is up for debate. But we're just sitting here, we're like fishermen. We're sitting here waiting for good opportunities in the market, waiting for some sort of divergence, some sort of idea, some sort of new story that can get the market moving, a couple of hundred pips that you can foresee. And that's where I get my edge in trading. Having the knowledge of what this story means for the market and being able to enter early and let the trade run, right? Now, on top of that, you put in a little bit of technicals, and you put a little bit of price action trading, and you get to a style which is very similar to mine. It's not the most aggressive, but it does make money. And it doesn't have to be as full time as I do it. You can definitely have a hands off approach and trade medium term with this sort of style. And the medium term traders are usually the most profitable traders. So really, I think you can get away with doing half an hour analysis a day, and have trades running, on the 1 to 2 week time frame. Just doing a little bit of chart check, a little bit of update on the news, update on, half an hour to an hour. You should be able to get away with it. You don't have to sit there and watch the market. Yeah, can we catch a monster? I don't know. I got the 680 points on the dollar yen, but yeah. I mean, look, you got to trade aggressively to make a lot of money. But those who are trading aggressively, there's a very high burnout rate on them because there's a lot of pressure when you're risking a lot of your account. So, I'm trying to actually perfect a style which I can then use for the next 20, 30 years of trading. And that's really what I want to get to, that point. I'm sick of the stress of trading, yeah? Like, I want to make trading as easy as possible. So, how would I do that? Back when the Kiwi story started and it spread to the Aussie, you sell the Aussie above 75 and you're just holding it to 73. And, you put your stop at, say, 76.20. If it gets above 76, you take the stop. Right? You may not have to check the charts for a couple of weeks, right? As long as the CPI comes in as forecast or slightly weaker, then the Aussie's got a very easy trajectory to the downside. There's not many other pairs which are that easy at the moment. But if you're long dollar yen from, say, 102, 103, you don't have to check the charts again if you're targeting 110. Okay, if you think that the BOJ will do a stimulus, you can just let the trade run. So, not many other pairs actually I can give longer term advice on at the moment. Everything else is a little bit harder. I was looking at your stuff, Slick. I've already talked about it. You did very well. Alright guys, that's enough for tonight. I'm a bit wrecked, so I'd be surprised if there's big movements today. Maybe you guys can scalp in and out if you want to get some action, but yeah, I don't see much right now. In terms of that other data, HSBC's put out a sell Aussie yen call. This trade makes sense, but it's contingent upon things happening which haven't happened yet. The main one that this is contingent upon is that the CPI is weak, and that the BOJ is disappoints. So yeah, they're anticipating a case of sell the rumor buy the fact with the yen. Alright, so we'll keep an eye on this one, see how this one would have turned out. Alright guys, good luck tonight. I'll be back on Monday, same time, 7 GMT, 9 GMT.